The most exciting app in DeFi on Ethereum right now, Compound.finance. Booming, killing it. Let's talk about it. So first of all, for those, let me just give a brief explanation. Compound.finance is a place where you can lock your tokens in. You can deposit them and earn interest on your deposit. And you can also borrow tokens at an interest rate. The way it works is it locks up a pool of tokens against another pool of, locks up the tokens in pools, and the borrowing and lending interest rate is based on an algorithm, based on the supply and demand. This thing's been up for over a year. It has had over $100 million locked into it for over a year. Recently, it's gone crazy. I think it's up to $500 million. I think, you can trust, there's always smart contract risk, but I think you can trust this one. It's the leader. It's one of the oldest that does this. So I like that. Now, the new innovation recently that is what brought it, made it all the rage, is so not only do you either earn interest or borrow, but you, based on usage, and that's the whole thing, I'll just say in general, you are also awarded, so if you deposit money in addition to getting interest, you get some comp tokens, the Compound, C-O-M-P token, which launched, it went up to $300. As I make this video, it's around $160. But, so when so for example, DAI, dollar token. And I like DAI. I'll talk about DAI in a second. But anyways, you deposit DAI. I think it's paying, 2.5% interest, which in this market is pretty good. And DAI token, I trust, holds its peg. In fact, if anything, it seems to be going higher than $1. And I'm also awarded comp tokens. The effective interest rate on this thing is like 10%. You know what I mean? Between the interest I'm getting, plus I get the comp token, and then you can sell the comp tokens. Assuming this price holds up, I'm making 10% of my dollars. That's pretty nice. And then, now, what a lot of people are doing, and this is where the excitement comes and people get crazy, and I don't get involved in monkey business. I like things that are simple. I've got some I want to hold dollars. I don't mind holding some in DAI. I lock it up. I earn 10%. That's great. It's enough for me, right? What some people are doing is they lock up their DAI. No, I think you can lock up they lock up other things. So or take USDC dollar token, lock that up. You earn something on it, use that as collateral to borrow DAI. And then you deposit the DAI back in, right? And you're earning on it again. And you can go to there's InstaDApp is an application. There's all these monkey business crazy, you lock up a token, you borrow against it, you lock that up, you borrow against that, you take that out and you deposit it, and you're earning a lot of money on it today. But the problem with that is there's two things. One is just in general, interest rates on this thing are moving crazy all over the place. I mean, WBTC, right? That's Bitcoin, custody Bitcoin. I was like, it was like 8% interest. I'm like, oh, that sounds cool. So convert some Bitcoin to WBTC, lock it in a compound. Well, now the interest rate is 0.5%. Oh, that was quick. USDC was paying like 2% interest. It went to like 0, but now it's up to 1.5. And so anyways, the risk, and then they have some crazy tokens. You can get BAT, basic attention token. There's ZRX. These are super volatile tokens. You start borrowing and lending, I don't know, you start borrowing on these tokens and the prices start changing and the interest rates start flipping around. All of a sudden you're underwater and start getting liquidated. So, first of all, you have risk of just getting liquidated. The other risk is just keeping track of all this stuff, right? It's very tricky to even know what you're making. You better be tracking, and they're not issuing you reports. You have to set up a spreadsheet and track all your money and how much you're making and losing, and it changes quickly to make sure It's worth the risk you're taking. And how do you even measure the risk? So I don't get involved in any of that. Now, if you're a super sophisticated financial guy and you want to do this all day long, okay, maybe, but that's not for me. What else was I going to say? There was another risk. So there's the keeping track. Yeah, anyways. So, but for me, like I said, deposit some DAI, earn some interest, or earn a nice rate, and sell off my comp as I get it. I like that. Now, I'm selling off the comp as I get it because I'm looking at this as just simply interest on my DAI. Keeping the token. So I am not a huge fan of governance tokens. Some may work out in the long run, but I'm not waiting for the long run on these things. I'm not a believer. So the governance token means Compound, setting interest rates, setting collateral levels, which tokens get accepted, and various things. Everybody votes, and based on the votes, they determine whether they're going to do something or not. And if you own a governance token, you have that share of voting. So first of all, I don't want to run Compound Finance. I'm not qualified. I don't want to. I don't want to vote every day. That's not for me. You can delegate your voting to somebody else, okay, but whatever. I don't care about voting, and I'm not sure this whole voting thing is going to work. Like, would you rather have some really smart person who was really good at understanding collateral and interest rates? Well, no, the interest rates are set by an algorithm. Who's whatever they're voting on. Would you rather have a genius or two determining how the thing runs, or a bunch of people voting? I'm not sure this voting thing even works in the long run. Now, one of the thoughts is they're going to vote to pay a dividend to the governance token holders, and that's where the value of the token comes in. I don't know. Well, first of all, if they vote that people will earn a dividend for holding the token, then maybe I'd buy it. But when is that coming? That's not even on the table. And also, I believe in the fat protocol thesis, which says that, Ethereum actually will accrue most of the value and not the applications on top of that. And I believe we're seeing that because it's the competition is intense and margins get tight quickly. So if there's anything to pay, any dividend to be paid out, you're competing against other people who may pay less or pay none. Look at Uniswap, which is not borrowing and lending, but as an example, there's no token, there's no dividend, there's a fee, and that fee goes directly to the people who supply the capital. And so there's no if you think about rent, paying a dividend is like rent seeking, right? It's sort of like owners taking. There's the people doing the trading, the borrowing and the lending, and the money doesn't have to go to somebody else. You can just stay within them. I don't feel like I'm not good at explaining this point, but the main point is I don't believe in governance tokens. I haven't seen one that really works or pays or is worth me holding at this point. So this Compound thing right now, and this is talk about things moving fast. But by the time I put this video up, it could be a different story, with Compound. But the governance token, as it is now, I'm not trying to hodl that thing. Now, that's also, I pick certain areas where I feel like I'm an expert in what I believe and this and that. I'm not always right, and I'm not trying to buy everything. The governance token may turn out to be great, and hold its value or go up a lot. But I'm just saying, I'm not holding. And also, regarding the safety and holding DAI, dollar peg token DAI is backed by Ethereum collateral. So the token, is pegged to $1. I'm trying to keep the peg. It seems to be going high. And when there's a panic, it seems to go high. So I like that, right? If there's a panic, I like something that goes up. And if the world starts, the whole thing starts blowing up, it is backed by a lot of Ethereum collateral, and you would get your your DAI value back in Ethereum. And if all that happened, the price of Ethereum would be low. So you'd be paid back your dollars in Ethereum at a time when the price of Ethereum is low, which means the value of Ethereum at that point is high. So I think that's why DAI seems to always trend high. I like holding some dollars in DAI, lock them up in Compound, earning some interest. Again, don't do a lot. Oh, there's one more risk. Yes. This is just an allocation. I have a lot of dollars, maybe too many. I mean, not invested, right? I'm holding cash. You look at my portfolio video, I get 50% in US dollars. It's a lot. So a little bit of it, I don't know what percent, let's say 5% in DAI sitting in Compound earning 10%, 5% of my US dollars in my total portfolio. So the risk, I think the main risk for Compound is that the thing seizes up. In other words, there's so much chaos in markets and fees are high, and then there's issues with the borrowing and lending goes out of whack, and it's like you can't get your money out of it. Not forever, but during the panic, it could get stuck. And you might actually earn some good interest or this and that, but you just can't get your money out. That's possible. So also, I like to hold some DAI not in there. So if there's a panic, I can sell my DAI to buy all the shit that during the panic went down in price, right? So don't lock all your money up in it either, because I think there is some risk of it getting locked up when you want it. So let me know your thoughts. Again, my channel here, davelevine.com. Subscribe, follow. I read all my comments. Let me know your thoughts. I also respond to almost all my comments. So keep me posted. Thank you.